As inflation climbs higher than anticipated and new tariffs loom, American households brace for a financial squeeze. The Federal Reserve's latest inflation data, a 2.8% annual rise in the core personal consumption expenditures index, signals growing pressure on everyday budgets. With President Trump's proposed tariffs threatening to push prices even higher, families, students, and retirees face distinct challenges that could reshape their financial stability in 2025 and beyond. For working and middle-class families, rising prices for groceries, utilities, and housing are already stretching budgets thin. February's 0.4% monthly inflation jump, double the Fed's 2% annual target, means even small purchases add up. Tariffs on imported goods such as electronics or clothing could exacerbate this pain. For example, if tariffs raise the price of Canadian beer, domestic brands like Budweiser might follow suit, as St. Louis Fed President Alberto Musalem warned. This indirect effect could ripple across everyday items from diapers to gasoline. Mortgage rates, already elevated due to the Fed's high-interest regime, may stay stubbornly high if inflation persists. Families hoping to buy homes or refinance loans could face delays, while renters might see landlords pass on rising maintenance and property tax costs. Students are uniquely vulnerable to inflationary pressures. Tuition fees, which historically outpaced general inflation, could climb further if universities raise prices to offset their own higher operational costs. Textbook prices, dorm fees, and campus meal plans may also tick upward, particularly if tariffs increase the cost of imported materials or technology used in classrooms. For those relying on student loans, the Fed's wait-and-see stance on rate cuts spells trouble. If the central bank delays lowering rates, existing variable rate loans could become costlier, and new borrowers may face steeper interest terms. Part-time jobs, a lifeline for many students, may also dwindle if businesses cut back hiring amid economic uncertainty. Retirees on fixed incomes are among the hardest hit by inflation. Social Security adjustments, which lag behind real-time price hikes, leave many struggling to cover basics like groceries, utilities, and medications. Healthcare costs, a major expense for seniors, could surge if tariffs raise the price of imported medical devices or pharmaceuticals. The Fed's upward revision of its 2025 inflation forecast to 2.8% spells further trouble. Retirees relying on savings or low-risk investments may see their nest eggs erode as inflation outpaces interest earnings. Boston Fed President Susan Collins highlighted the risk of more persistent inflation if tariffs trigger broader price hikes, a scenario that could force retirees to make painful cutbacks. The Fed remains divided on whether inflation will fade. Chair Jerome Powell insists tariff-driven spikes are transitory, but others, like Musalem, warn of lasting second-round effects if domestic companies hike prices permanently. For families, this uncertainty means tougher budgeting. For students, it threatens deeper debt. And for retirees, it risks financial insecurity. While traders still bet on rate cuts later this year, economists like Capital Economics' Stephen Brown argue the Fed may hold firm, prolonging the pinch. For now, households must navigate a landscape where every dollar stretches thinner, and hope the Fed's inflation battle doesn't come at their expense. If tariffs broaden or trigger retaliation, inflation could become more persistent than just a fast adjustment to higher prices, says Boston Fed President Susan Collins. Inflation and tariffs are not just macroeconomic trends, they're forces reshaping the daily lives of millions. Are the families, students, and the elderly facing a prolonged season of financial strain without relief? Without meaningful relief, the cumulative pressures of inflation and tariffs threaten to lock families, students, and retirees into a prolonged cycle of financial strain, one that could reshape economic mobility and security for years to come. For families, persistent inflation erodes purchasing power, forcing households to make unsustainable trade-offs. Parents may delay medical care, opt for cheaper and less nutritious groceries, or pull children from extracurricular activities to cover rising rent or utility bills. Over time, depleted savings and increased reliance on credit cards could deepen debt burdens, limiting opportunities to invest in homeownership, education, or retirement. If tariffs push prices of essentials like clothing, electronics, or cars even higher, middle and lower income families risk falling further behind, exacerbating wealth inequality. For students, the ripple effects of delayed Fed rate cuts could extend far beyond graduation. Higher interest rates on student loans, coupled with climbing tuition and living costs, might force graduates to prioritize debt repayment over starting families, buying homes, or pursuing entrepreneurial ventures. Younger students, meanwhile, could face reduced access to part-time jobs if businesses curb hiring amid economic uncertainty. Over time, this could stifle career trajectories and delay milestones, perpetuating cycles of financial insecurity for a generation already grappling with historic student debt. For the elderly, retirees on fixed incomes have few options to offset inflation's bite. Many may resort to cutting essential expenses such as skipping medications or reducing home heating use, risking health and safety. Others could be forced to re-enter the workforce in low-wage roles, competing with younger generations in a tight job market. For those relying on savings, prolonged inflation means their nest eggs will buy less each year, heightening fears of outliving their resources. The psychological toll of financial instability, anxiety, isolation, or loss of independence could compound these challenges. The path forward requires proactive measures. Policymakers could expand targeted relief, such as enhanced child tax credits, student debt forgiveness programs, or stronger Social Security cost of living adjustments. The Fed, meanwhile, must balance its inflation fight with clear communication to avoid spooking markets or households further. Communities, too, play a role. Food banks, tuition assistance programs, and senior subsidies could provide critical lifelines. Yet, without swift action, the convergence of sticky inflation and protectionist trade policies risks entrenching a new normal of diminished living standards. As Boston Fed President Susan Collins cautioned, the stakes extend beyond economics. Prolonged financial strain threatens social cohesion, public health, and faith in institutions. For millions of Americans, the clock is ticking. Inflation and tariffs are more than statistics. They are storms weathering the foundations of everyday life. Shelter from the storm must come soon, or the damage may become irreversible.